America could run out of money in the next 2 weeks. What does this mean for you? Not only that, but the banks could continue to fail if America doesn't step in and prevent this from happening. Interest rates and inflation have been rising. There is potential, a silver lining here if you want to gamble and play the markets. We go into all of this in today's discussion. Guys, this will be jam-packed with information that you do not want to miss. I promise. Let's get into it.
The Fed hiked 25 basis points last week. They said we're coming in for a soft landing and we're going to pause in June. I disagree. The data is showing us otherwise. You look at job growth, you look at wage growth, you look at job openings, still unacceptably high for what the Fed needs to see. All of those things mean continued inflation, and the inflation numbers are already high in state. So do they hike or do they pause in June? The data is still saying that they potentially could need to hike. The markets are betting otherwise. The Fed is saying otherwise, but the data is disagreeing with both of those folks. So people are expecting the economy to slow down, expecting job growth to slow down, and it's not happening. Wage growth is not slowing down. It's actually accelerating. So that is exactly the opposite of what the Fed needs and wants for inflation to come down.
If you were a politician and you were making a speech to somebody, you would say, "Hey guys, things are great. Jobs are going up, people making more money, everything's good." Why is this not a good thing?
It's not a good thing because when people have more money, when there's more jobs, that means people can spend more. And that means businesses can raise their prices more, which we'll see in a little bit. And they are raising their prices more. All of that means inflation. It means inflation in the things you buy. It means inflation in going out to restaurants. That is not what the Fed wants to see. And they have this concept called a wage price spiral. It's I make more money, I spend more money, prices get higher. And that's what happened in the 1970s. And we saw higher wages, higher prices, and all of a sudden, we start to run away. So what the Fed wants to see is wages coming down, jobless claims going up. And they say they want them to only go up to a certain level. Great. And, maybe that happens. It's never happened in history.
Is this essentially to protect the US dollar? Is that really what the goal is here? I mean, because everything else sounds fine otherwise, except for the fact that if we continue to do inflation, that continues to debase the dollar, which that could be a significant problem, probably greater than anything else that we're talking about.
It's a big confidence game, right? The banking model is they hold, 10% of deposits and they loan the rest out. If everyone went to the bank at the same time to try to get their money, they couldn't do it. So it's all a confidence game. It's all about appearances. And we have to be smart enough as investors to think about what are they telling us, and then what should we really be taking from what they're indicating and what the data is saying to us.
So do you think this is why Balaji, he's still confident in his assessment that we're seeing, still a hyperinflation US dollar, even though we're being told otherwise from the Fed and the likes of the Washington and things like that?
Bitcoin was never a good inflation hedge because inflation happens in a period of months to years. Bitcoin has been a good debasement hedge. If you think the dollar is debasing over time as inflation is eating away up and above, what the U.S. as an economy earns, Bitcoin is an awesome debasement hedge, and that's Balaji's bet. It's to make sure that you have an alternate store of value that is not getting debased. What happens when the Fed actually decides to cut rates? We think that means crypto Twitter thinks that means full send, right? That's what happened in 2020. They cut rates and things went to the moon. We all bought GameStop, and we went sky high. If you look at this chart here, you can see that might be the case if we don't have a recession. If we do have a recession, the bottom line here, things kind of 6-12 months out are okay, but they slowly trickle up. And that's because it takes a while for the cuts to filter through the economy, for you and me to be paying lower rates, for people to borrow at lower rates, and all of the credit sort of process that we've talked about in the past. So what does that mean for Bitcoin and crypto and other risk assets? It means that if we're in a recession, we're likely to be sort of flat to down, even if the Fed is kind of cutting rates, unless we get more stimulus checks, unless we get direct payments. And that is what happened in 2020 that really changed the game. We sent out $3 trillion to people. And guess what? When you send out $3 trillion to people, they're going to spend it. And that's what produced the inflation. And that's what produces a lot of the higher prices. And it's been holding the economy up. So can we do that again? In the US, maybe. Other countries don't have that privilege. They don't have the dollar. And you could see the end game, as you talked about earlier, is sort of coming for the US dollar, right? We can only debase the currency so much before people say, hey, why are we giving the US this privilege? Why are we letting them print all this money? It doesn't make any sense. We want that. We want that opportunity. So you're going to start to see a pushback, and you're going to continue to see a pushback. Right now, there's no clear alternatives to the dollar. So the US is lucky in the short term. But longer term, there's going to be some changes. Let's talk about earnings season. So going into this quarter, everyone was saying earnings are going to roll over, profits are going to go down, companies are going to be feeling the effects of inflation. And that has not been the case. If you look at the chart here, earnings estimates and earnings beats. So I say, Microsoft says they're going to make $1 this quarter. They actually make $1.25. Great, that's a beat. Have been, near all-time highs. And the way they've been able to do that is, if you look at the chart on the right, they've actually, you see profit margins, that's revenue up and above your expenses, are much, much higher than the actual costs these individuals are paying. What you see here on the dotted line. These gray lines are recessions. So you see every recession, we have a sharp drop off in profit margins. And we're not seeing that today because of a lot of that excess savings that I talked about. We still have $1 trillion out there that people can use to actually spend into the economy. And they've been not only using their excess savings, but they've been using their credit cards. You can see it in the credit card data to support these higher profit margins. These things cannot last. There is no way we can continue to have companies continue to raise prices higher than the consumer can spend.
What allows the corporations to increase their profit margin? Are they using inflation as an excuse just to make more money, or what's going on here?
Yeah, man, if you go to the deli now, it's like $20 to get a coffee and a bagel. And that's not everywhere, right? That's New York City. But, even here in Boston, right? If I go get my normal sub that I was getting, that was $10 before, it's like 16 now. So it's,
wow.
People are using it as an excuse, and it's not, it's real. If you're the consumer, you're seeing it.
Guys, if you're watching this, I'm curious. Let me know in the comments below where you live and give us some examples of things that you've purchased on a regular basis, maybe 1 or 2 years ago, and how much it costs today. I'm really genuinely curious about the different countries around the world, where you guys are from, and what you're buying that costs way more than it did not too long ago.
Okay, so the debt ceiling. The US needs to issue debt to pay its bills. That's paying for military spending, that's paying for Social Security, that's paying for government employees. And there's a certain limit to the amount that they can actually, raise. We're going to issue 30-year treasuries. You're going to give the government money. They're going to spend it on all the things I just said. We're running up into the limit of what the treasury has that they, can sort of spend. And that's the debt ceiling. We've hit that ceiling. So they have to ask and say, hey, can we issue more money? Can we get more money to pay for the things you already told us we have to pay for? And this process has been going on for a long time. 78 times the debt ceiling has been raised since 1960. It always gets raised. This time will be no different. If you look at the chart here, you can see each debt ceiling showdown. And each time the debt ceiling showdown has happened, this cost has risen a bit. And you can see here in these little pops, it has risen to the highest level ever, which should show you the amount of sort of brinksmanship that we're seeing between Republicans and Democrats and what they want to spend money on, and if this debt ceiling will actually get done.
What happens if the government defaults? Has that ever happened in history?
There have been numerous periods where the government has quote unquote defaulted. They've paid late based on this debt ceiling debate, but it's never been as closely watched as it is today. So if the US government were actually to default on its debt and not have enough money to pay obligations, the Treasury Secretary, so Yellen, could say like, hey, I just want to pay for this one thing or this other thing. So technically we didn't default, but we didn't have money to pay for these other things. The end game for this, though, is we're likely to go down to the wire. We always go down to the wire with Republicans and Democrats debating. Market turmoil almost always precedes those events. And then you're likely to see, once we resolve the issue, some sort of relief rally, which I believe is going to be a great time to provide some exit liquidity for a lot of the stress we're going to see later in the year.
When is this supposed to go down, this discussion, and what's the deadline?
We might run out of money to pay our bills as a U.S. government in the next 2 weeks. It's variable based on how payments that are coming in. Janet Yellen said June 1st. If you look at the way and the how fast we're spending down money in the Treasury's account at the Fed, it looks like it's going to be a lot sooner than that. So we need to resolve this very quickly, and there has been no clear progress.
Does that mean if the debt ceiling is raised, that more money is printed?
If the debt ceiling is raised, you're not printing more money, you're just issuing more treasuries to actually get in money from consumers. So we're not printing any money across the board. Down the line though, the end game is probably going to be continuing to print more money, and for the Fed to actually absorb a lot of that debt. Because if we want to issue, so after the debt ceiling's resolved, we have $3 trillion plus of debt we have to issue to pay for our bills. There are only so many countries out there who can actually buy our debt, only so many companies who want US debt. So eventually we need the Fed to actually step in and purchase that debt because there's nobody else to do it.
So what that means, raising the debt ceiling, is that the US will sell its debt in the form of a treasury to usually a foreign state. And the foreign state will then buy this debt in the form of a treasury at some interest rate, right? And then the US guarantees to pay them back in some period of time.
Exactly. It's like you buying a treasury bond. You say, hey, I'm going to buy a 10-year treasury bond, and I'm going to buy it with a 4% interest rate. That means that 10 years from now, the US government, and they'll be paying you 4% along the way, will return to you your, say, $100 you bought in that treasury with 4% interest. So you'll have $104. The US government has been considered the quote unquote risk-free rate because they've always honored those obligations. If you go to Venezuela or another country, they've quote unquote defaulted and not paid back those borrowers. So psychologically, the debt ceiling is really important, not just because, hey, if we miss one payment, it's not a big deal. We'll pay people back in a few weeks. It's the psychological impact of the US being the baseline currency of the world. How
much of the US debt is foreign owned?
About 24% of US debt is owned by foreigners. A lot of that is China. As we've seen many times over in the past few weeks, China is actually diversifying away from treasuries, buying more gold, maybe soon even Bitcoin, who knows? But there's less appetite to absorb treasuries, especially when we're going to issue the most amount of treasuries we've ever seen. Multiple trillions of dollars we have to fund in government bonds just to pay our bills. Those interest payments the US is paying, they're paying interest at 4% or whatever it is to China or you or whoever is owning the bond. In aggregate, as part of our US budget, are over $1 trillion in interest payments alone. Because interest rates are so high, these banks have lost money on these investments, and also are having a lot of trouble being profitable. They can't borrow at 5% and try to lend at 7-8% on a mortgage. It's just really challenging to do. So, we're going to see continued struggles and continued outflows from the smaller banks because people are saying like, hey, these small banks can't take it. Why don't I just give my money to JP Morgan or Bank of America? Hey, if they go under, the government's going to back them.
Right.
If First Republic or someone else goes under, I don't know, maybe they're going to back them, maybe not. So this chart here is interest rates over time. You can see every time we've hiked interest rates, without fail, there has been some sort of crisis. So what is the crisis today? It's the regional banking crisis. At the end of the day, again, it's a confidence game, right? If everyone went to their local bank and wanted their money out, you couldn't get it. So, you need to keep the confidence up. You need to make sure that people are okay with keeping their money in those banks. The interesting thing though for Bitcoin and for crypto in particular is as you've seen these banks go down in sort of their stock prices, you've seen Bitcoin perform almost the opposite. So these banks go down, Bitcoin goes up, which shows you that Bitcoin is really leaning into that store of value, to that safe haven asset that we've been waiting to see for a long time. Not only is Bitcoin potentially a great investment for the next, call it 6-12 months because of the risk off characteristics it's exhibiting, but also because the fundamental basis of the asset is improving. Bitcoin on this chart, you'll see, has the most amount of transactions it's ever had, the most amount of transaction fees it's ever had, and it's finding new utility and use cases through ordinals and through these new L2 type solutions for Bitcoin. Right. This whole new design space has opened up, and it's making it fundamentally a better asset because of that. Meme coin season is really usually quick and furious, and then you have one or two that latch on and tend to stay around. They don't stay at the levels that they traded at their peak. But, for every Dogecoin, you have a Shiba Inu. And in this cycle, it might be maybe it's Pepe, and maybe, Wojak sells off or something like that. But there's always one or two that kind of stick around. But these cycles are short and furious, and because they're built with leverage, right? A lot of people are aping in leverage trading, and at the first sign of trouble, they usually kind of roll over, and it's the meme that really has to keep the asset up.
So yeah, I mean, for me, what this meteoric right up for Shiba, I would probably say that if we were in a better market, I would have expected Pepe to flip Shiba or Doge, but the fact is, it has a less than 10% of the amount of holders that Shiba and Doge does right now. If we're going into a bull market right now, I would say that it would continue to fly, because the narrative is such an engaging community right now. If you were someone who did get into Pepe early on, it's probably not a bad idea to at least take out your initial and just sit and watch and wait what happens right now. That's what I'm doing. I took out earlier today all my Pepe, and then I'm just gonna watch it. I think that it's really interesting, because one of the things that I realized, I'm a stickler when it comes down to, token economics and like real uses for blockchain. But I've come to terms with the fact that people value comedy. And if they say that it has value, then meme coins have value, and who might argue with that? So anyway, that's meme season.
So here's what I expect to happen the rest of May. The near term, we have this banking crisis, and that's going to continue till the government steps in. But it doesn't solve the underlying issue we talked about. Interest rates are still too high. They need to remain high because wages are strong, job growth is strong. So the Fed needs to keep rates there, which is going to make banks suffer. There's no way around that, and there's nothing the government can do about that. So longer term, we're going to see broader issues because of that. We're going to have a resolution in the debt ceiling, likely to have some sort of relief rally because of that. But because of these broader issues, I think any relief rally should certainly be sold, and is a great time to continue to remain defensive. Is also a good time to continue to add to Bitcoin as well, as we've seen Bitcoin trade, to the positive side as these banking stocks have sold off, as this banking crisis continues to sort of happen, as it's sort of an alternate store of value for consumers. But it's time to remain cautious. It's time to batten down the hatches, because we're going to see some trouble in the next few months.